G'day legends and welcome back to another video. Bitcoin has seen a continued crash into the Gaussian channel lower band and leading span B of the Ichimoku cloud on the weekly chart. This correction comes as a result of Bitcoin failing to maintain at that 90,000 point of support, a point which we are circling on the chart. This level was a 2 to 3 month long support level back in 2024 and early 2025. We've said in our prior videos that the breakdown of this support will be the trigger point for the next leg downward, a downward move we have now seen play out. We are still anticipating the potential for a correction as low as 74 to 76,000 provided Bitcoin remains under this 90k resistance. In today's video, we are diving deep into the macro and the short term. We'll be discussing everything you need to know about this short term correction. We'll be discussing the weekly charts in regards to the current retest of two major points of support, the leading span B and the Gaussian channel lower band. We'll also be taking a look at the 2-week chart as we are coming to retest the upper band of the Gaussian channel, and we'll be discussing when the next stage of the bear market begins. There are multiple stages of the bear market. We have reversals, we have initial sell-offs, we have mass capitulation, and then we have consolidation and bottoms. We'll be discussing when Bitcoin is going to be entering the mass capitulation stage, meaning that this drop may be far from over. I'll also be showing you guys my indicators that I use to predict the exact bottom for Bitcoin. Whether that comes as a result of the 5th of October 2026, the bear market bottom as predicted by the 4-year cycle, or whether or not we see these indicators flash early, we'll be going over the exact indicators I've used in prior cycles to pinpoint predict the bottom within a 2-week range. So we have a lot to take a look at today. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into the content. So, as we mentioned in the intro, a lot to discuss. So let's jump over to the market data first and foremost, because we have seen some big surges in 24-hour liquidations. We have got $1.8 billion in 24-hour liquidations, with $1.5 billion, nearly $1.6 billion coming from long positions as Bitcoin saw a pretty brutal flash correction. If we look at this hourly chart here, and actually if we zoom into like a 1-minute chart even, and we zoom out a little bit to this correction, you can see here, this was the correction that we saw taking us around 85,000 all the way back down to 81.3, a near 5% move in a matter of minutes. So we saw some massive amount of long liquidations on that downward move, and we have seen still the price action chopping downward ever since. Moving back over to that data, we can see, guys, volume is up 28%. Again, this is expected, 477 billion. Looking at the breakdown, the vast majority of those 1.8 billion in liquidations are coming from Bitcoin and Ethereum as per usual. Moving over to the DXY. The DXY is closing out now. We'll open up again next week. We have closed in that point of resistance at 100. It's going to be very interesting to see how that develops moving into the new week, of course. The probabilities for interest rate cuts have actually slightly increased, but that doesn't necessarily mean we are going to see a cut. I still think the most likely scenario for the Federal Reserve is going to be moving towards an interest rate pause due to the government shutdown, due to the uncertainty surrounding future economic data, and of course, just an overall safe play for the Federal Reserve. pausing and then reassessing in 2026. That, of course, may be anticipate, or should I say, may be perceived as a very bearish for the markets and could actually drive a bit of a correction. So we do need to pay attention to that. The interest rate decision is coming up on us. It's around 18 days. There's still a lot to happen and a lot can change until then, but it is something to pay attention to. Moving over to the S&P 500. The S&P 500 is still in a downtrend very clearly underneath that daily 50 EMA represented by this downtrend diagonal trend line. This is the trajectory of the price action. So provided we remain underneath this downtrending trend line, we are expecting lower prices for the S&P 500. We are expecting an initial target of 6,500 and then we are looking for 6,250, essentially just above this VRPV gap as bearish targets. And of course, if we break this downtrend, we're then watching for breaks of prior lower highs to then turn bullish again, but it is unlikely that is going to happen unless we see a pretty aggressive interest rate drop and the overall market sentiment really start to flip on its head. But it does appear that this is a reversal developing and the macro downtrend for the S&P 500 may just be getting started. So it's something to pay attention to as well. With that being said, guys, let's jump over to Bitcoin. We have a lot to take a look at. I do want to urge you guys, if you want to support the channel, go ahead and sign up to BitGet, BitUnix, and BingX. Those are the exchange links down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. You'll support me making the content on a daily basis, and you'll support yourself in your trading journey. Including all of that, you'll get access to monthly bonus campaigns. This is exclusively for BitUnix. We have 60, 100, 30, a variety of hundreds of thousands of dollars given away every single month, essentially. Last month, we did $100,000 giveaway. This month is a $60,000 giveaway. To get access, all you need to do is literally sign up for the link and you will automatically enter into this one and every single one for every single month we do. So check it out. Let's play your ad, guys, and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's go ahead and get into it now. I want to start by taking a look at the 4-year cycle and the stages of the bear market and why we are approaching a major trigger point where, if broken, will initiate the next stage of the bear market, which is the mass capitulation stage. Essentially, the stage where we start to see everything correcting a lot more aggressively, likely a lot faster, and likely a lot steeper. So the risk of continued downtrends, the risk of this bear market continuing is still very much on the card. So let's take a look at this indicator. This is simply going to be the Gaussian channel 2-week and the 2-week 50 EMA. Now, if we look at the 2-week chart really quickly, we have got the 2-week close happening in just 2 days from now. I want to really urge you guys to pay attention to this because the 2-week close is going to be incredibly significant at triggering the next stage of this bear market. But we also need to understand, if we look back historically at the price action for Bitcoin on that macro scale, particularly looking at that 2-week level, going back as far as, again, August 2018 and coming back into March, April, May 2022, we can see that this 2-week level of the Gaussian channel upper band has actually acted as a bit of a support level for the price action to move into a small upward grind or sideways consolidation prior to then triggering the breakdown, which inevitably results in the price action dropping to the lower part of the Gaussian channel and entering that consolidation phase, which we know to be where the bottom actually develops for Bitcoin. So remember, the bottom doesn't likely come in on 1 week and then it starts up. We generally move from mass volatility to gradually decreasing volatility, which moves into more of a sideways type consolidation where bearish strength begins to diminish and then bullish strength begins to increase. This actually appears on the chart as a bit of a consolidation where we have massive reductions in volatility and volume, which is where the bottom is generally established. In terms of the price range, that is anticipated to occur once we break below the Gaussian channel lower band. That is when we enter that consolidation phase. And of course, if we look at the weekly chart, the 2-week chart on the macro, we are anticipating a potential bottom for Bitcoin anywhere between that $52,000 to $36,000 range. Again, we've talked about why that is the case. Simply, that is going to be underneath the Gaussian channel lower band on the 2-week. And of course, that is anticipated to occur around about the 5th of October, 2026. So let's dive into it. If we take a look at this 2-week Gaussian channel in 50 EMA and just circle every single time we've dropped below both of those levels, we'll circle on the bottom left over here as well. We've got the 2014 cycle, we've got the 2018, and we've got the 2022 over here. What we can see is upon the breakdown of the Gaussian channel upper band in 50 EMA, that is when we enter that next leg of the downtrend. That is the leg where we see these significant drops happen over the course of around 2 to 3 months, taking us to retest that lower level of the Gaussian channel and then entering this consolidation phase where we generally then find a bottom. Again, looking at these consolidation phases, we had consolidation phase over here where we found the bottom, we had a consolidation phase over here where we found the bottom, and a consolidation phase over here where we found the bottom. Again, this one was more of a horizontal consolidation with a mass liquidity grab below. This was, of course, also more of a horizontal consolidation, and this was a falling wedge consolidation. Again, a bullish consolidation, suggesting that bearish strength is diminishing. In all of those scenarios, we had some sort of sideways consolidation or downward consolidation develop, moving into what was eventually the bottom. So we could theoretically see this correction happen relatively soon and then consolidate slowly for a longer period of time, moving into that expected bottom date, or we could see it happen earlier. We could see consolidation happen sooner than later, meaning we could see some sort of bounce develop from that 2-week Gaussian channel, kind of holding the price above there for a couple weeks or maybe a month or so before we then later on drop below that level, causing that capitulation into those lows. Either way we spin it, we need to see the 2-week breakdown for the next leg down. If we're looking for the next leg down for Bitcoin, the 2-week breakdown needs to happen. And therefore, this is going to be a possible support level until then. Meaning, we could see the price drop below, but it is likely we are going to see 2-week closes above. So we need to be open to the idea of potential bounces beginning to develop, moving forward from now, until we then break back below the 2-week chart of the Gaussian channel, and that is going to be the trigger for extended, stronger corrections below the Gaussian channel and into a likely bottom consolidation. This will be a likely bottom consolidation here before we then continue back up on the macro, however that may be in 2026, 2027. So that is our assessment. That is the level we are watching. That is the key trigger point that will start the next phase of the bear market. Let's take a look at now the bottom expectations. For bottom predictions, I use a very interesting indicator. We all know the Ichimoku cloud, but the Ichimoku cloud has been fantastic at predicting or projecting when the bottom has been in Bitcoin. So I'm just going to go ahead and bring it up over here, and we utilize the Ichimoku cloud baseline. Let's go ahead and make that a little bit more clear. We'll get rid of the conversion line, leading span A and B. We'll just get rid of those. Actually, we'll keep those in. Let's turn that baseline up. What we can see here, guys, and this is a fantastic assessment from what I've noticed through the history of price action. We utilized this back in 2019. To get the bottom, we actually utilized this publicly when we actually had our channel back in 2022 to get the exact bottom. And we'll utilize this again. And what this is once the 2-week baseline of the Ichimoku cloud closes below the leading span B, we have historically seen a bottom occur within a 2-week window on or after that point. that is something we should pay very close attention to. So now here's the kicker. If that happens sooner, or if that happens later than October 5th, 2026, as per the 4-year cycle bear market expectation, we still have to take that at face value because this will be more significant than this date range trend. So if that happens sooner, we'll be anticipating an earlier bottom. If it happens later, we'll be anticipating a later bottom. If it happens right on time, well, that is just more confidence that that will be the bottom for Bitcoin. So pay attention to that, guys. Let's go ahead and jump over to the weekly chart now. Now, as we know, another major thing has happened over the past 24 hours, and that is, of course, we lost the midline of the Gaussian channel. Now, we know already, we've discussed many times on this channel through this bull market that the breakdown of the Gaussian channel upper band very likely results in continuations through the Gaussian channel, with key points being the midline and the lower band. These are key potential bounce points. Now, not macro reversal points, just simply bounce points. We failed to bounce on the midline, we broke through, we have now retested the lower band and the leading span B. If we take a look at the prior bull market, again, the breakdown of that level resulted in the initiation of that stronger capitulation downwards. Just to look at this percentage rise, right? If we look at that drop over here from the lower band down percentage wise, that's a 50% drop right there, right? That's a pretty significant drop. So if we take a look at the top to that point, we had about a 50% drop. So if we take a look at this correction to this point, that's about 36%. So adding about 36% there, that would take us to 51 to 52,000. Hence, we have that $52,000 target. We have 36 to 52,000 to account for a minimum expectation and then a maximum drop expectation. Somewhere within that range, we will likely see a bottom, provided we follow what the data, what the charts are suggesting, right? So, taking a look at that, we are paying very close attention in the next 2 days for a daily candle close to remain for a weekly candle close, sorry, to remain above this level. The breakdown of the level will likely result in the price action coming into this gap on the VRPV as a first potential target, which is going to be that $74,000 to $76,000 level, of course, where we could see reversals develop and then we come back lower. So pay attention to that. Essentially, however, what I'm trying to say is that the break of this level will likely trigger the 2-week breakdown of the Gaussian channel upper band rate, which we know to be the next stage of the bear market initiating, and will likely result in a correction into that 74 to 76k level, where we should find some temporary support, potentially moving to a sideways consolidation before we then take that continued leg down as anticipated by the 2-week close below the Gaussian channel upper band. So pretty complicated, a lot of different layers there, but I hope that makes sense. Let's move over to the short-term price action. So as we can see, guys, and as we've made it very clear, you know, I don't think I could have made it any more clear, if I'm being honest. I've been bearish this entire time since the 6th of October. We told you every single bounce is an opportunity to short. Every single rally will likely end in exhaustion and not go as high as people anticipate. And we'll likely see continuations into support levels, where if broken, we'll see continuations in lower support levels. Pretty basic stuff. Essentially, the loss of this 90 level was the trigger for a correction. We have seen that play out now, and we are actually seeing it play out, should I say. So we are anticipating continuations into 74 to 76. Now, the consequence of that, whether it be within the next 2 days or not, we will see a likely close below the Gaussian channel lower band, if not in the next 2 days, because that is when the weekly candle happens, at least in the next 9 days on that next weekly candle. And then if we extrapolate that forward, we have 16 days until the next 2-week candle, if this 2-weekly candle is able to defend this upper band, which is very likely. So I would say within 16 days, we are going to be running the risk of retesting 74 to 76k and potentially running the risk of that 2-week breakdown, something we'll talk about more in the future when we get up to that date. So taking a look at the short term, guys, again, a very clear way to put this is for the buyers to be in control. I like to look at things like this when I see as continued trends. When I look at continued trends, I like to trade on invalidation approaches, meaning essentially trade with the direction of the trend until the trend is invalidated. Essentially, we expect the trend to continue until proven otherwise, in the most basic layman term. What would we expect for the trend to be invalidated? Well, we need to see strength, structure, trend. Strength, we need to see positive momentum. That has not happened. We need to see a break of the trend. This is the downward trend. Has not happened. And we need to see a structural shift. We need to see a lower high break, which is 108,000. So you can see already how high Bitcoin will need to go before we even run the risk of breaking this overall trend. We have to push into 106, 108. We need to get above 108,000 to eliminate the risk of everything we've talked about in today's video. While Bitcoin remains below 108,000, it doesn't matter if we see bounces. There is still going to be just a short-term bounce before an extended continuation lower. For Bitcoin to turn bullish, and that is why we have, I don't know if you can see, this box over here is slightly green. That is the trigger point that we need to break through to invalidate essentially the bear market, to put an end to likely the bear market. So until then, guys, it's looking very grim. I do anticipate lower. Will we see 74K in the next 2 days? I don't think we do. Will we see 74K in the next 16 days, moving into the second weekly close, 2-week close? I think it's very likely. And then, of course, those trigger points do suggest that, you know, this extended bear market or this continuation in the current bear market is very, very plausible. Finishing up, total cryptocurrency market cap, of course, next target 200 moving average. Not much to say over here. It's looking very, very bad below the 2021 high. And of course, the total altcoin market cap looks like hell. So that is that, guys. Thank you for tuning in. I'll catch you guys all on Sunday. Have a fantastic weekend. I'll catch you guys, sorry, not Sunday, on Monday. So not tomorrow, the day after. We'll see you then. Bye.